What's up? Is the bottom in faithful? Dave here, and today we're diving deep into a stock that's been making headlines for all the wrong reasons, Beyond Meat, ticker BYND. This plant-based pioneer has seen its share price absolutely decimated, and many of you are asking, is there any hope? Is the bottom finally in? We've crunched the numbers, pored over the charts, and I'm about to reveal our complete analysis. All right, let's kick things off with the big picture. The current market narrative around Beyond Meat, and frankly the entire plant-based meat category, is pretty grim. We're seeing widespread softness, especially in the crucial U.S. retail and international food service segments. Management themselves have admitted disappointment with recent results and are openly talking about a fundamental reset. This isn't just a hiccup, it feels like a genuine struggle for market relevance and profitability. Despite a couple of quarters showing sequential revenue growth, the overall sentiment is extremely cautious. The general consensus out there, and what we pick up from the news, is that BYND is battling some serious headwinds, and investors are feeling the pain. For those new to the show, Beyond Meat Inc. is exactly what it sounds like, a company that manufactures and sells plant-based meat products. They've got a range of offerings across beef, pork, and poultry alternatives, selling everything from grocery stores to restaurants and schools. Founded back in 2009, they're headquartered in sunny El Segundo, California. Now, the company's official forward guidance, or at least what we can infer from management's comments, is essentially a candid acknowledgement of these struggles. They're working on that fundamental reset, which tells me they know they've got some heavy lifting to do to turn the ship around. So, how do we reconcile this challenging market narrative with what the company is actually doing? Well, the management's talk of a fundamental reset and their disappointment with Q 2025 results aligns perfectly with the current headwinds in the plant-based category. They're basically admitting what the market is already seeing. Now, let's break down our three scenarios, starting with the base case. This scenario assumes that Beyond Meat's reset efforts manage to stabilize the business. We're not talking about rapid growth here, but preventing further steep declines in revenue and market share, building on that recent sequential revenue growth. We took their implied TTM revenue of $306.69 million, projected FY 2026 revenue to stabilize around $290 million, and then, assuming a modest PS multiple expansion to 0.18x, which signals a tiny bit of market confidence in stabilization, we calculated a total equity value of $52.2 million. Dividing that by the 76.23 million shares outstanding gives us a fair value of 68 cents per share. I'm giving the base case a 40% probability. This feels like a plausible outcome if management can just stop the bleeding, especially since the current price of 65 cents is already close to this value, suggesting some stabilization is being priced in, even with the technical challenges. Next up, the bull case. This is where Beyond Meat pulls off a remarkable fundamental reset, exceeding all expectations. Imagine a huge revival in consumer interest, new product innovations, better taste, or super competitive pricing. We're talking significant market share gains, especially internationally, and a clear path to profitability. For the valuation, we project FY 2026 revenue to jump significantly to $380 million and assume a hefty PS multiple expansion to 0.80x, reflecting that renewed growth. That would give us a total equity value of $304 million, leading to a fair value of $399 per share. Now, for the probability, I'm giving this a mere 5%. Why so low? Because the technicals show us a strong downtrend, and there's significant resistance all the way up at $311. To hit our bull target of $399, it would require not just a fundamental turnaround, but a forceful break above that major technical hurdle, which frankly looks like a long shot right now. Finally, the bear case, and this is the one we need to pay closest attention to. This scenario sees Beyond Meat's fundamental reset completely fail. The challenges in plant-based intensify, market share erodes further, profitability remains elusive, and revenue declines continue beyond management's expectations. Liquidity concerns could even resurface, crushing investor confidence. For the valuation, we project FY 2026 revenue to decline significantly to $220 million and assume a further contraction in the PS multiple to a mere 0.07x due to severe loss of confidence. That gives us a total equity value of $15.4 million, leading to a fair value of $0.20 per share. I'm assigning the bear case the highest probability at 55%. The technicals paint a very clear picture here. The stock is in a strong downtrend, no sugarcoating that. We've got clear support levels below us at 0.45 and then even lower at 0.35. These are key levels to watch. Now, for any kind of significant turnaround, for this stock to even think about resuming an uptrend, the price absolutely has to maintain itself above the $3.11 mark. That's a major resistance level, and until we see a sustained push above that, the bears are definitely in control. So, is the bottom in for Beyond Meat? Based on our deep dive, the overwhelming answer is likely no, at least not yet. With a 55% probability assigned to our bear case, leading to a fair value of $0.20, and the technical screaming downtrend with major resistance at $3.11, the investment thesis for BYND remains highly speculative. The significant downside risk currently overshadows any limited potential upside in the short to medium term. While the base case suggests a potential stabilization around $0.68, even that is a fight against very strong currents. My verdict? Proceed with extreme caution. This is not for the faint of heart. Given the high probability of the bear case and the strong downtrend, direct buy levels are incredibly speculative. However, if you're an extremely risk-tolerant investor looking for potential entry points if the stock continues its descent and shows signs of capitulation, you might watch those technical support levels around $0.45 and 35 cents. For any significant long-term investment, you'd want to see a clear and sustained breakout above $3.11, indicating a major shift in trend before even considering our bull case target of $3.99. But right now, that seems a long way off. All right, that wraps up our deep dive into BYND. What do you think? Did we miss anything? Let me know your thoughts in the comments below. If you found this analysis helpful, smash that like button, subscribe to the channel for more unbiased stock analysis, and hit the notification bell so you don't miss our next episode. Now, as always, remember this is for informational and entertainment purposes only. I'm Dave, and I'm not a financial advisor. This is not financial advice. Investing in the stock market carries inherent risks, and you could lose money. Please do your own due diligence, consult with a qualified financial professional, and never invest more than you can afford to lose. Past performance is not indicative of future results.